Fed Presidents Loretta Mester and Mary Daly both speaking out, saying they still expect 3 rate cuts this year, but they may need to see more data. Joining us now is Alan Blinder, former Fed Vice Chair and Princeton University Professor of Economics and Public Affairs. Thank you so much. It's great to see you, Alan.
Sure, thanks.
There's a lot of sort of back and forth. There is a lot of, as there always is, in scrutinizing, one could argue, over-scrutinizing the data that we get on a daily basis. But, you know, as somebody who was inside the Fed, what do you make of the sort of decision process that we are witnessing right now?
I think maybe the first thing a lot of your viewers should realize is the Fed does not get nearly as excited over the daily data stream. There are numbers coming out every day. Some of them look good, the market gets excited. Some of them look bad, the market gets depressed. You know, divide that by 100 for how the decision makers on the Fed feel about it. Same direction, but much, much smaller.
So, Alan, I'm just curious, what is, when you look at 2024, when do you expect the Fed to start cutting?
Well, I've been saying, somebody gave me credit for this on TV a long time ago, but I've been saying, rightly or wrongly, for a long time, something like middle of this year. And I still feel that way. There have been ups and downs. So there have been periods where it seemed like it might be closer, periods when it might be more distant than we thought. I'm still fairly comfortable with thinking the first cut comes in June, give or take. Now, when I say that, would I bet a lot of money on that? No. I don't know when it's going to come. Look, truth is, Jay Powell right now today doesn't know when it's going to come.
Right. Yes. As he says, he's data dependent. And even though some investors have their own opinions about that, you know, we take him at his word. Right. So do you then think that we are not going to see a meaningful reacceleration in inflation that maybe some of the data from January and February hinted at?
Yes. And the key word in your sentence was meaningful. That doesn't mean there won't be some upward blips as there just was. But I think I don't see anything in the data to strongly contradict the view that inflation is trailing down slowly, maybe not surely, because there will be some ups and downs on the way, but down, not up. And if it keeps trailing down, it's not going to be too long before it's right around where the Fed wants it to be, 2%. People need to remember, among other things, that when you look at CPI, as your screen just showed, you want to add about a 0.5 percentage point to make it equivalent to what the Fed is looking at, the PCE index. So the target, so to speak, translated to CPI is about 2.5%. We're not very far from that.
Alan, one interesting dynamic I want your take on is that, you know, the economy is growing, unemployment is low, Alan, wages are going up. Why don't Americans feel better about this economy? Every survey I see, every poll, you're asked about the economy, it doesn't sound like our friends and neighbors feel too good about it. What explains that in your opinion?
Boy, I wish I knew the answer to that. I can think of two things, but I'm not convinced that either is certainly not a full answer. One is the confusion between the price level and the rate of inflation. The rate of inflation is coming down. The price level is not coming down. We don't want it to come down. We know how to get the price level to come down. Have a depression. It came down quite a lot in the 1930s. Nobody wants that. But I think the public has a very poor understanding of the difference between the price level. They talk about things being expensive, even though they're not rising in price very quickly right now. The other thing, I think this is out of my expertise as an economist, there's a general grumpiness in the country over many, many things. And you can understand, I won't go into detail, but you can understand where that grumpiness is coming from. And it rubs off on everything. So people are sort of unhappy. You know, this question that's always asked, is the country going in the right direction or the wrong direction? I never know what that means. But I think if I had to answer a public opinion poll on that right now, I'd say the wrong direction. But I wouldn't be meaning the economy when I answered that question.
Interesting, Alan. And lastly, before we let you go, I am curious to ask you about a recent op-ed that you wrote for the Wall Street Journal, where you talked about this presidential election and what's at stake purely from an economic perspective.
Right.
And you talked about a number of different things, but if you could choose one economic policy that you think is really going to be pivotal depending on who sits in the White House for the health of the economy, what would that be?
Can I choose two?
Sure.
I'll be short. In terms of importance, by far, it's climate change. This is the one thing that's potentially existential. We're frying the world. That's a very bad thing. And the two candidates have very different views on that. Closer to home, in terms of what's really controllable by the political system, I would put taxes. You know, we have a lot of the Trump tax cuts are going to expire next year. And if President Biden is still in office, he's not going to let that happen. I'm sorry, he's going to let that happen. He's going to use the revenue for other purposes. If we get Donald Trump back in the White House, more than likely we're going to get an extension of those tax cuts. And they're a pretty big deal.
Alan, always love having you on the show. Thanks for joining us.
Sure, you're welcome.